A central bank and BlackRock teaming up on one of my altcoins. I wouldn't have believed it either until I saw the evidence. So one of my sleepy crypto holdings suddenly shot up 70%, and I found myself chasing a trail of clues that led straight to some of the biggest names in finance. All right, let me set the scene. Right, I'm checking my phone and I see Hedera, you know, the HBAR token, absolutely ripping upwards. And I'm talking a crazy 70% jump just over a few weeks. 70%. Now for a coin that usually just creeps along, that got my attention real fast. Now my first thought was, okay, what did I miss? Did some influencer hype it up? Did Elon Musk tweet something weird? And I needed to know why my HBAR was suddenly the star of the show. So I start digging around for the news. Hopping into our free educational Discord server, the link by the way is in the description, to kind of see if anyone else was freaking out about this. And sure enough, the Discord crew were buzzing, right? Some people were posting things like, did you guys see what VanEck said about Hedera? VanEck, by the way, isn't just some random Twitter guru, no. It's a huge asset management firm. When the Wall Street types, start talking about an altcoin, you know that something is up. So I pull up this VanEck report, and it's like a goldmine of what I would call institutional gossip. Now, the report basically highlights that Hedera's network has been on a tear, and not just any tear, right? We're talking partnerships, big usage growth, and this phrase that stuck with me, broadening institutional legitimization. Fancy way of saying that big players are finally taking Hedera seriously. Now my jaw, of course, is on the floor at this point. And I mean, Hedera was always a bit under the radar for many people, and here it is getting love from the major finance powerhouse. Now, I'm a story guy, so let's just rewind a little bit. Hedera Hashgraph, or Hedera as it's known now, HBAR's the token. If you haven't heard of it, you probably need a bit of a refresher. It's kind of like the less flashy cousin of the Ethereum blockchain and the Bitcoins of the world, right? It doesn't even really use a traditional blockchain. It's actually built on something that is called a Hashgraph. But don't worry, I'm not giving you a pop quiz on that, right? The gist is that it's super fast, its transactions cost like 1/1000th of a penny, and it's governed not by anonymous miners, but a council of big organizations. We're talking Google, IBM, Boeing, and a bunch of other corporate heavyweights, all literally running the show on Hedera's network. So, some crypto purists, they sigh-eyed the model. It's not decentralized enough. But guess what? It might be exactly why governments and banks are actually cool playing in Hedera's sandbox. It's kind of like a safe sandbox for institutional experiments, if you will. So let's get back to my investigation then. VanEck's saying that HBAR soared 70% in July thanks to this wave of adoption news. They started listing examples, and the first one that nearly made me do a spit take with my coffee was the Reserve Bank of Australia. Yeah, the Aussie Central Bank. Right? Apparently, they have this thing called Project Archax. Fancy code name, right? But which is all about really exploring tokenized asset markets, basically figuring out how to represent real assets like bonds or whatever as digital tokens. And guess which network that they actually roped into this pilot? That's Hedera. Now, when I read that, I had to double check. I wasn't, on some kind of fan fiction website. A central bank using Hedera's tech. That's kind of like hearing the Fed is quietly beta testing Dogecoin. Okay, well, not exactly, but you kind of get the idea. It blew my mind. And it gets better, right? This project isn't a small potatoes project. It's wholesale markets, money moving between big institutions, potentially using a digital Australian dollar or something similar. Now, Hedera being that kind of mix is a huge stamp of legitimacy, right? So let's think about it. If a central bank is experimenting with Hedera for settlements, then they're basically saying, yeah, this tech is stable and secure enough for our level of serious business. And for a long time, crypto people have been like, institutions are coming, and here they are. They actually are, and kind of just sneaking in the back door via Hedera. So, at this point, I'm already pretty impressed, but VanEck's report was just like an infomercial. Wait, there is more. The next example that they drop is Archax, right? Now, unless you're deep into crypto or in the UK, you might never have actually heard of these guys. They are essentially the first regulated digital exchange in the United Kingdom. Basically, a legit, government-approved crypto exchange that's geared towards institutions. So you can think of these guys as the bridge between old-school finance and the new world of tokenization. Now, according to VanEck, Archax announced it's going to actually be using Hedera for settlement. Settlement is just a fancy way of saying that when trades are actually done, the assets and money actually get swapped and finalized. So if an exchange chooses your network for settlement, that means that they trust it to move potentially billions of dollars reliably. Now, that alone is pretty bullish, but then comes the kicker. In late July, right, Archax went ahead and, created tokenized versions of real-world funds on Hedera. Not just any funds. We are talking market funds named after BlackRock, Fidelity, State Street, Aberdeen, LGIM, which is another big asset manager. I practically jumped out of my chair at this point. BlackRock and Fidelity, right? Those are like the Avengers of finance, and their funds, tokens, were showing up on Hedera's ledger. Now, you can picture me, bleary-eyed at midnight, double-checking that I wasn't hallucinating those names. It's real, right? Archax's CEO even confirmed that those tokens represent real funds that could soon be transacting in HBAR, signaling early pre-launch interest in real-world asset tokenization on the network, transacting in HBAR. So, not only are those giant fund tokens on Hedera, but if they start moving around, they'd actually be using HBAR for the transactions. That is a dream scenario for a HBAR holder. It legitimate demand from massive finance players needing HBAR to do the business. And it's still early stage. As in, these are just trial contracts right now, but the groundwork is clearly laid. The door is open and the lights are on. They just haven't started the party. Now, at this point in my research, I'm pacing the room. I'm half excited and half in disbelief. It's kind of like I found a secret cheat code in a video game, right? I mean, how many times have we heard crypto projects brag about we're talking to institutions? And here, Hedera quietly has BlackRock's name in its transaction history. It's kind of bonkers. Now, if you're thinking, okay, but are these just one-off events? A pilot here, a test over there. I was wondering the same, and that's when another piece of the puzzle fell into place: stablecoins. Now, VanEck noted that stablecoins use on Hedera basically went parabolic. And I'm not using that word lightly either. We're talking about the supply of stablecoins on Hedera's network hitting all-time highs and practically exploding overnight. Now, the data showed that it almost was, at least entirely, USDC, which is Circle's big stablecoin, really driving it. So let me kind of break that down. Stablecoins are like the lifeblood of crypto trading and decentralized finance, DeFi. Now, if a network suddenly has a ton more stablecoins flowing through it, it usually means that more people are using the network for something. Trading, lending, payments, you name it. Now, in Hedera's case, the supply of stablecoins grew by over 400% in a single month. Now, that was reaching roughly $200 million in July. Now, it went from mere tens of millions to over $200 million worth of tokens circulating on Hedera's blockchain in basically just a few weeks. That's insane growth. Now, one theory is that Hedera's DeFi and tokenization ecosystems were relatively small before, but perhaps, because of things like the Archax pilot or other applications, suddenly a lot more USDC poured into Hedera so that the transactions can actually happen. Now, if BlackRock's and Fidelity's funds are going to trade, people will likely use USDC to settle or to invest in those tokenized funds. Or maybe some new Hedera-based applications launched that needed more liquidity, right? I later found out that Hedera also rolled out something that was called Stablecoin Studio, a toolkit for launching stablecoins, and even an Australian dollar stablecoin, AUDD, went live on Hedera recently. So all the stars kind of aligned. More tools, more use cases, more stablecoins. I should mention too, around this time, that Hedera got some love in terms of exchange listings too. Kraken Pro, the exchange that I personally use the most, full disclosure of course, Kraken Pro is a link that's in the description, is an affiliate link that supports the channel here. Anyway, they finally listed HBAR. Robinhood, the popular trading app, added HBAR as well, and so suddenly it was easier than ever really for both retail and traders to buy Hedera. Now I remember the day that Kraken listed it. I was pretty pumped because now I could trade HBAR on the very same platform where I keep most of my crypto portfolio. Well, the part that I'm actually willing to keep on exchanges anyway. And even pinged a friend like, dude, Kraken's got HBAR right now. Things might get spicy. And guess what? They did, right? The additional exposure and access undoubtedly helped the fuel of that rally. All right. It is time for a quick reality check though, and this one might just shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your own responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is for entertainment and educational purposes only. Seriously though, I do get excited about this stuff, but I'm not here to tell you to go all in on HBAR or do anything crazy. I'm just sharing what I found because I think it's fascinating and maybe even a sign of where crypto could be heading. Now, after the necessary kind of disclaimer, let's get back to the juicy story. With all these kind of clues, the Aussie Central Bank project, Archax, tokenizing BlackRock fund, stablecoin usage spiking, I started to piece together a bigger picture here. Hedera isn't just randomly pumping because of hype. It's pumping because it might be quietly becoming the go-to network for real-world finance experiments. It's kind of like the world's largest companies and institutions all decided to throw a surprise party on Hedera. And, now regular people are noticing the noise. And I kind of got to thinking about why Hedera specifically is getting so much attention. Now, remember how I mentioned the Hedera Governing Council? It's kind of like the kind of who's who of respected organization, right? Google, IBM, LG, you've got Telecom, Dutch Telecom, right? And of course, you've got others, all kind of literally run nodes and they guide Hedera's direction. So if you're a central bank or BlackRock, and you're a bit wary of, truly decentralized networks run by anonymous miners or validators, Hedera might feel a little bit more, familiar or trustworthy. After all, it's public, but it's got guardrails, right? It's kind of sense, at least in a sense. There's a boardroom vibe to it. And I can almost imagine some banker saying, well, if Google and Boeing are involved, then it must be legit enough for us to test it. And ironically, the more centralized approach, which was once seen as Hedera's weakness in the eyes of die-hard decentralization fans, is actually turning out to be its strength in onboarding big players. Now, another personal anecdote here is that a buddy of mine is a huge Ethereum buff. Now, he used to tease me for holding HBAR, calling it corporate coin or joking that it's kind of a boomer DLT, right? Because of the suits and the council, right? So when I told him, hey man, Hedera is pumping and it looks like BlackRock and even central banks are tinkering with it, he was stunned, right? We ended up having, this kind of fun debate. He was like, doesn't really matter. Ethereum is still the main playground, right? And I'm like, sure, but Hedera might actually quietly eat a chunk of the enterprise market while you're not looking. We eventually kind of agreed that maybe different networks will serve different niches, but I could tell that he wasn't really, or at least he was begrudgingly impressed, I guess, that the boring corporate coin was actually doing cutting edge stuff. Now, let's go ahead and talk about the impact, right? If even a fraction of these institutional experiments turn into real usage, the demand for HBAR could increase quite significantly. Imagine BlackRock actually launching those tokenized funds on a public ledger like Hedera, right, where trading those funds tokens require HBAR for fees. Or the Reserve Bank of Australia expanding its pilot so that major banks are using HBAR under the hood to move digital Aussie dollars around, right? We're not talking meme coin vibes here, right? We're talking real adoption scenarios. It's stuff that would actually have sounded like science fiction just a few years ago, at least in the crypto space. And yet, I also know that the crypto space is well enough to kind of temper my excitement, right? We've seen plenty of announcement hypes, that never actually go anywhere. Not every pilot becomes a full product, right? It's possible that some of these initiatives hit technical snags or regulatory hurdles. Perhaps the RBA decides not to move beyond the pilot phase, or Archax's tokens remain no more than a demo than the kind of daily trading reality, maybe, right? It's all kind of early stage, as VanEck themselves actually emphasized, right? The key is that it's interest from the right kind of players. And that in itself is kind of noteworthy. Another angle is that Hedera's not alone in courting institutions, right? Networks like Ethereum with permissioned consortium chains, Avalanche and others are all eyeing the pie too, right? But seeing concrete evidence like those funds tokens on Hedera gave me a sense that Hedera has a foot firmly in the door, and it's actually doing the right thing, or doing its thing, I should say, not just talking about it. By now, I should say, what started as me chasing a 70% pump has turned into me fundamentally reevaluating Hedera's place in the crypto ecosystem. And I'll be honest, before this, HBAR was just one of those coins that I held to see what happens, right? A kind of we'll see attitude. And I like the tech, fine, but it wasn't the kind of most exciting thing in my bag. This whole adventure has changed that. I'm leaning at least a lot more bullish on Hedera now. Not in a kind of it'll go 100x next week kind of way, but I'm not about that kind of life. But it's more in a project might actually have some staying power and some real role in the future of digital finance kind of way, if that makes sense. Now, I even hopped back into our Discord server after doing all this research and started dropping tidbits about a giddy little professor, right? Or at least like a giddy professor, I should say. Now, we have a channel where we share news like this and the analysis. And if you're not in there yet, you should come and join. It's a pretty awesome community. I was like, guys, did you see Hedera's stablecoin volume? And I can't believe BlackRock's name is literally on Hedera's ledger. That sparked some great conversations. Some people were already way ahead of me, pointing out that Hedera's been building quietly with enterprises for years. They reminded me that even ServiceNow, a big service software kind of company, uses Hedera for some back-end stuff, and that Hedera's been involved in tracking carbon credits and ad data. In hindsight, all the clues were there, right? It just took this perfect storm in July to make everyone, myself included, sit up and pay attention. Now, one thing that I love about moments like this in crypto is how they really do humble you, right? I consider myself pretty much up to date, but the crypto world is vast. You can't follow everything in real time. So there are always going to be those moments where you go, I didn't see that one coming. But that's kind of a part of the thrill. You follow a rabbit hole and you come across, or come out the other side and you come across totally new perspectives on a project. Now for Hedera, this feels like a turning point. If this were a movie, it's a montage scene where the underdog athlete suddenly outperforms the champions in practice, and everyone's like, wait, this kid is the real deal, right? The big question, of course, is will the momentum continue? Will Hedera go from these, initial pilots and tokenizations to full-blown everyday adoption? Now, from where I stand, this trajectory looks pretty promising. Hedera's on-chain stats are booming. Transactions have surged along with stablecoin influx. I didn't even mention earlier, but Hedera does millions of transactions every day on average. A lot of these things are like supply chain logs or ad tracking, not just finance, of course. It shows that the network can handle at scale, which is reassuring. Now, with stablecoins and potential real-world assets, starting to move around, those transactions carry more economic weight. And when you have more real economic activity on a network, well, that tends to reflect on the network's value over time. We should also consider the bigger picture. 2025 has been shaping up to be a year of real-world asset tokenization in crypto buzz. That's the idea of taking traditional assets and putting them on the blockchains, right? The fact that Hedera is already at least a playground for that with heavy hitters means that it can actually ride that big wave, in real time. It's kind of like being a small startup that's can at least suddenly kind of got contracts with Google and Amazon. Usually, the kind of, foretells a growth spur in the making. And on the other hand, playing devil's advocate again, if too much of Hedera's success hinges on just a few big corporate players, it could be a double-edged sword, right? If one of those big partnerships falls through, it might sting quite a bit. But honestly, Hedera's ecosystem is broader than just BlackRock and friends. They've got startups, a growing DeFi scene, NFT projects, and yes, there are NFTs on Hedera, believe it or not. It's a diverse ecosystem, which is good, right? The institutional angle is just what's lighting up the market right now. And so, as I kind of wrap up this wild research ride, I realized it. That it wasn't just about one token mooning just a little bit. It's actually about seeing real fundamental validation for a project. So, like all of a sudden, the adults in the financial world showed up to Hedera's party. And to me, that's immensely validating for crypto as a whole. It's a reminder that the innovation that we've been excited about is starting to actually seep into mainstream, even if it is a little quiet. And in the end, chasing this HBAR story was a wake-up call for me. It reminded me to keep my eyes open for subtle signals, not just flashy headlines. A line in a report here, a sudden spiking network activity there. Connect the dots. You might discover something huge before everyone else. And in this case, those dots spelled out Hedera is having a moment. Now, I'm really glad that my curiosity pushed me down this rabbit hole instead of just shrugging it off with the pump. Whether you're a HBAR holder or just a crypto enthusiast, it's a pretty awesome case study in how adoption can happen quietly and all at once. Hedera went from just being another token in my portfolio to something that I'm actively following now with excitement. And so here is my takeaway. I'm definitely going to be watching Hedera's next moves, right? I even added a little bit more HBAR to my stack, nothing too crazy. I'm still all about balance and not FOMOing in, don't worry, right? But I do feel like I've rediscovered a hidden gem that was in my pocket the whole time. And even if HBAR's price rides the roller coaster, which it will, because crypto is a volatile as heck, then I have more confidence now in its long-term potential. I can genuinely envision a future where I'm using some finance app or game and under the hood, it's running on Hedera. And most users probably won't even know it. And that is kind of beautiful in a way, right? The tech just working seamlessly, mainstream folks not even getting a whiff of it, but still getting all the benefits. And we early nerds knowing exactly what is going on under the hood. And all right, so I've rambled on long enough according to you guys in the comments. Now this was kind of like my personal detective story meets crypto analysis. And I hope that you found it at least as intriguing as I did. And if nothing else, at least you got me, nerd out, at least I had nerd out over something like BlackRock on a crypto ledger, which I still think is ridiculously cool. But for now, you can subscribe for more stories like this, smash the like button, and I'm going to catch you all in the next one.